Hey guys, it's Scott McGregor at Scott Trades in the stockmarketmentor.com forum and at Scott Trades on Twitter. As you know, I have been involved in the crypto market for a couple of years now, and the last few weeks in crypto have been crazy, especially this week. Maybe by now you've heard about Sam Bankman-Fried and FTX. And so what has happened is FTX, one of the world's largest exchanges, has gone insolvent. So really want to give you a video about how this happened and where we go from here. But I want to start really by taking a step back and talking about Sam Bankman-Fried, where he came from, how he got started, and how up until yesterday, he was one of the richest people in crypto. Sam started a quant firm in 2017 called Alameda Research. And he started that company after he left a prop trading firm. He went to school at MIT and he started making money in Bitcoin, started trading Bitcoin. And one of his biggest money makers was a Bitcoin arbitrage trade where he was selling and buying Bitcoin between America and Japan. And he started doing this with just $200 because, as it turned out, the price of Bitcoin in Japan was higher than it was in America. And he started out with $200, ended up at one point trading about $25 million a day. Now, the price of Bitcoin would, say, be $10,000 in America, and the price in Japan would be $11,000. And so at one point, he was making about $1 million a day, every day of the week, because Bitcoin trades 24 hours a day. So he's buying Bitcoin in one place, selling it in another, and making money off of that spread in between. Then in 2019, once he has all this money and understands crypto, he started FTX. He started up FTX, which is a crypto trading platform. Within a few years, FTX becomes one of the biggest trading platforms in the world. In 2020, they raised $900 million at an $18 billion valuation. And some of the investors that I'm sure you've heard of by now are involved, including SoftBank, Sequoia Capital. Even the family office of Paul Tudor Jones was an angel investor. We also see Binance, which is a competing exchange, put money in, though they end up divesting their shares a year later. In 2022, they raise money again. They do a C round and raise another $400 million at now a $32 billion valuation. They have celebrity sponsors and clients like Tom Brady, Matt Damon, a Super Bowl commercial with Larry David. They're signing deals with Major League Baseball. They're naming arenas. I mean, this was one of the biggest new companies, one of the biggest things, and everyone's coming in.
Probably just getting another dentist. This guy. First, even if you wanted to come back, we wouldn't take you.
Yes, you would. Yeah, we would.
You're right, we would. What's up?
I'm getting into crypto.
With FTX. You in?
We're providing gives 360-degree access to the crypto market with the ability to trade everything from alts to DeFi. I believe I'm in, but still hate you.
Understood.
Take care. Best of the family.
Is he in?
Yep,
Did he say he hates you?
he did.
Even on the phone, that guy sounds handsome.
Sam was a frequent face on CNBC. He's on Capitol Hill. He's working with regulators, and he's helping to develop regulations with elected officials for Bitcoin, crypto, and other digital assets. He even went as far as to hire a former commissioner of the Commodity Future Tradings Commission. And so it looked like on the outside, they were aligning themselves with all of the right investors and all of the right regulators. And they were really going to be a major player along with Coinbase, Binance, and Gemini, which, by the way, was started by the Winklevoss twins. Behind the scenes, though, they were lobbying to kill certain aspects of DeFi that would end up harming their competitors, basically making certain types of yield illegal unless it was done through FTX. Head of Binance US ended up leaving Binance US after he was caught leaking information about Binance to FTX. And there started coming out all of these different articles against Binance, really kind of, putting Binance in the focus of regulators as Binance is the bad guy, FTX is the good guy. Now, if we go back a bit further, you may remember the Terra Luna debacle. Luna's stablecoin, UST, gets attacked. It breaks its peg and causes a huge death spiral of Luna. And some of the biggest investors in crypto end up getting caught up in this. They end up, a lot of them, losing everything. Some big platforms like BlockFi and Celsius burn to the ground. Voyager Digital gets crushed, and there's tons of forced selling in Bitcoin and other cryptos. That happened earlier this year, and it was a total mess. Now, during all this, who swoops in to be the white knight? Sam Bankman-Fried. He starts buying up some of these companies and really adding value to his balance sheet. FTX starts looking like a solid player. Sam looks like a hero. Everything is great. He's all over TV again. Jim Cramer's interviewing him. CNBC, even recently, a few weeks ago, did a special, like a 45-minute special about Sam Bankman-Fried.
Let's talk about what's going on with Sam Bankman-Fried. In just the past 5 years, Sam Bankman-Fried went from buying his first Bitcoin to becoming a multi-billionaire. The FTX founder is now worth an estimated $11 billion. He could have bought that Jordan jersey if he wanted to. His exchange is now worth $32 billion, and it brought in about $1 billion in revenue just last year. CNBC's Kate Rooney has more on the CEO's rise to the top of the crypto industry. They call him the JP Morgan of crypto, right?
Yeah, the Michael Jordan of crypto, if you will.
Now, earlier this month, a crypto news site called CoinDesk released an article questioning the relationship between FTX and Alameda Research. In the article, it said that a significant amount of Alameda Research's assets were held in FTT, which is FTX's exchange token. It was a lot, like more than a third of the balance of assets were held in FTT token. Now, before this, we see Sam Bankman-Fried posting on Twitter all the time, every Monday, about buying FTT. He would post a little picture that he was buying FTT and then burning it. And now what this does in crypto is this helps keep the value of that token high because it takes supply out of the market and then gets rid of it completely. And so every Monday he'd tweet out, "It's that time again, not financial advice," with a picture of his screen that he was going to be buying essentially millions of dollars of the FTT token that day. And so it's a token that, like I said, investors used, investors had, and it looked like he was once again supporting investors. So because of the CoinDesk article, people started questioning the relationship between FTX and Alameda, as I mentioned, and whether or not some of the funds that users had on the exchange were actually being used for Alameda, because it started to look like FTX didn't have all of the crypto that they're supposed to have on the exchange. And this past week, the CEO of Binance, Changjiang Zhao, or as we call him, CZ from Binance, got word of all of this with FTX and Alameda and the FTT token. And it turns out that he, as I mentioned, had invested, and they still had about $2 billion worth of that FTT token, which again is FTX's native token. He wants to sell it. And he also tweets out that he's going to do his best not to crash the market, but doesn't like the idea of someone lobbying behind his back. And he also says that he's learning from Luna. Uh-oh. What does that mean? Now, as I mentioned, most exchanges have their token. It's very common. But it's important to keep in mind that a lot of these exchange tokens are just invented things. So the worth of this token is only derived by what the market will bear. As a user of this exchange, by holding this exchange token, you can use it to pay for fees. So if I'm buying something, instead of, the fee of that transaction being paid in, maybe US dollars or stable coin, it can be paid in some of these exchange tokens. And from an investment standpoint, you hold the FTT token as your investment for the company. So different ways that people can use this token from both an investment standpoint and then from a trading standpoint. So what happens? The CoinDesk article loads the gun and CZ fires his shot. Once CZ puts a sense of doubt about the FTT token into the market atmosphere, we get an immediate wobble in the market. FTT starts whipping up and down. Sam goes on Twitter, comes out on the defense, and writes this thread, which has now been deleted. And he says, we're being attacked by a competitor. FTX is fine. FTX assets are fine. We're fine. Everything's great. Now, why this really matters is because of what FTX had done. They had given their sister company, Alameda Research, loans collateralized by FTT, mainly for futures trading, and the liquidity of FTT being just a small token ended up being so thin that it didn't take much to move the market. And so the float of FTT was about 300 million coins. But if you are an active investor and you know that an active seller is coming in with billions of dollars on the sell side, you have the ability to front run that sale. And so what ended up happening is we saw exactly that. People started shorting FTT, coming and attacking FTT, and Alameda Research started selling off their other assets, their other coins to support this FTT token. And they held a ton of other coins like Solana, for example. In fact, Solana was down 40% yesterday. A lot of people think because FTX was essentially selling out their Solana to raise money to hold up this token and to pay off, whatever margin calls that they were having. And then they did the ultimate. They stopped user withdrawals. Now that's pretty key because when this happens, there's rarely any coming back from it. We saw that happen with BlockFi. We saw that happen with Celsius and Voyager. Now, I'm one of the people who have followed this company. I saw the money that they had raised. I read the news articles. I saw the Super Bowl commercials and the celebrity endorsements. And I honestly never thought that FTX could go insolvent. I mean, how could they? I see their logo on F1 cars and on Major League Baseball umpire jerseys. I mean, they're a big company. They're a big deal. And so we didn't really know what was happening. We didn't hear anything from Sam. We didn't hear anything from FTX. No one was really tweeting. And then CZ from Binance tweets out that there's a liquidity crunch at FTX and they had reached out to Binance for help. Sam bent the knee to CZ. They ended up signing a non-binding letter of intent to buy FTX based on their due diligence in the coming days. And this gave a lot of us the sense that FTX could be saved. User funds are probably going to be okay. CZ will come in, save the day. It's all fine. But then shortly later, Binance kills the deal. And they say that there's too much damage done. And today, actually, Sam Bankman-Fried is out looking for about $10 billion to save FTX. Now, I'm doubtful that's going to happen, but they are 10 billion in the hole. So where do we go from here? Now, what makes this situation even worse is the fact that Alameda Research was a big market maker. That means that they have tokens all over the place. And so if they need money, they're going to be selling those tokens. And so there's real risk in the market right now, especially in any of the projects that they've invested in, like I mentioned, Solana. And there's never just one cockroach. So that's something that I'm watching right now. Even though we're getting a big update in the market thanks to CPI, I still think it's very risky in this market right now, based on everything crypto and everything crypto related in the stock market. Now, this could eventually be good for Coinbase. We don't know. But from what I understand, Sam Bankman-Fried has even been forced to sell off some of his Robinhood holdings. He owns 8% of Robinhood. And so you're getting a cascade of selling in Hood as well. Now, some investors like Sequoia Capital have written down their loss from FTX to zero. And they did that on Twitter while humble bragging that they're actually doing quite good this year. Others may not be so lucky. So is this the end of crypto? I highly doubt it. Most of the best developer talent in the world is leaning into blockchain. Talk to a lot of the devs coming out of MIT. That's where they want to go. Blockchain isn't going anywhere. Even JP Morgan has their own internal blockchain that they use. We saw a couple of days ago, Meta and Facebook teaming up with Polygon. Polygon has been ridiculously strong on this bounce, almost a 30% move off the low. And so the genie's out of the box, but there's still a lot of headline risk and potential blow-ups down the road that we may not know about. So as investors, what does this mean to you? It means a few things. Number one, be careful. Be real careful right now. Number two, it means not your keys, not your coin. It's best to custodian your assets in crypto off of an exchange and into a cold storage wallet like a Trezor or a Ledger. I have one right here, Ledger Nano X, I think is what it's called. And you say it's like a offline thing. Put your crypto in here. You can look at it on your phone, and you can sync it up with a USB on your computer. It's pretty user-friendly. So that's important. You can then take your seed phrase from your hardware wallet and put it in a safe place like a fireproof safe, something like that. If you are trusting a third party like an exchange with your assets, you better make sure that they're not using these assets as leverage in other parts of their business. If you are still, at this point, interested in Bitcoin, Ethereum, or other crypto, do your research, know what you own, know why you own it, and keep your time horizon in check. If you want to hold something for 5 years, probably don't look at intraday 10-minute charts. It's going to make you go crazy. So that's the update on FTX. This is an evolving situation. By the time I get this out to you, it may already have changed. But I wanted to give this update to you because it is something that's big, happening in the market as we speak, and something that we've never seen, at least in crypto before. While there have been other financial disasters in stocks, bonds, commodities, etc., this is one of the biggest that I've seen in crypto, and hopefully the last in my lifetime. This has been it's been a brutal year between Luna and now FTX. It's really been a volatile year, especially with inflation attacking high-risk assets like Bitcoin and Ethereum. So I hope this video is helpful. It's a mess out there. There's lots of volatility, but for active investors, volatility also means opportunity. I'll see you soon.